Hi everyone, this is Arpad from StarPath Academy, and today I'm going to talk a little about real estate and my opinion about real estate, and I'm going to put that in the context of a question posted by one of my members on Patreon. So the person asks, "Hi Arpad, we did purchase," so this is an ongoing conversation, this is the last question so far. "We did purchase a beautiful 5-acre property about an hour from our home. It has a log cabin on it. We're trying to decide whether to sell our home in the suburb, which is paid for, and pay off the new place we just bought, or rent our house. The other option is to work at paying off the new house as quickly as possible. I also feel like rather than continuing to work, I should retire and work on self-sufficiency skills. I know you're not a financial advisor, but what would you do?" So the very short answer is I would want to keep all properties. I would want to pay them off, all of them, as soon as possible. I would try to keep my job and the income from my rental in order to help with paying off the rest of the properties. If it happens that I would want to retire, then I would still want the rental income, right? Ideally, you want to have, or I would want to have the property that I live in to be paid off, not my rentals. But as long as I have one property paid off, I would be at least fine with that, right? But be working on paying off the rest of the properties. Now, of course, it all depends where the property is and if it rents well and if it doesn't rent well. And we'll go into all of that a bit later. And then there are some risks with some properties, especially if they are not paid off in a deflationary scenario, which seems to be happening, right? In an inflationary scenario and in the hyperinflation scenario, it plays out differently, and that is what we will be exploring further. For now, that's the short answer, and yeah, I would want to keep everything and not sell it unless I need to sell it. In a normal scenario where, well, normal for the last 4 years or 3 years, in a normal scenario, I would actually want to refinance the property instead of being paid off and purchase more property, or use that cash to have as a cushion for later on, for taxes and for some other stuff, or if renters are missing and all of that good stuff. But in these cases where the interest rate has already gone up, I'm not refinancing any of my properties, but I'm trying to build that cash cushion where I have at least 12 times the rental income put away for each of my houses. So that's pretty much it for the short answer. Now let's go and explore rental property during a inflationary period, deflationary period, and a hyperinflationary period. As the person stated, I am not a financial advisor. I'm not giving advice. Even if I would be a financial advisor, I couldn't give advice because that needs to be personal regarding your plans, right? So, but I will give my kind of thoughts around it, and just to give you, the viewers and the person that was asking the question, what are some of my thought patterns when I'm thinking about these kind of stuff, right? So everything needs to revolve around your future plans and long-term plans, and what are you doing. So based on your age, whether you're going to retire or not, your plan might be very different, right? Based on how much cash savings you have, what other investments you have, and so on and so forth. So absolutely, I cannot give advice. I will not give advice. But here are some thoughts that you can kind of hear and think about. Yeah, think about when you're asking your own financial advisor that you paid for, I guess. Okay, so well, first of all, congratulations on the 5-acre property. That's perfectly sizey. That's a really good size, and you can do, if it's hopefully flat and sunny, you can do a lot of stuff on there. Don't forget the orchard, very important to have nuts and some other stuff as well. Okay, so perfect log cabin, very good. And now regarding the suburb, we are now in well, it's hard to say if it's a peak or not, but we are, in my unprofessional opinion, I'm guessing we will have a short downturn in the market, but it will not be as bad as many people think, at least for now. Of course, things might change. My guess is that people are going to hold on to dear life to their properties because they have purchased it with a very low mortgage interest rate, and it makes sense to hold those properties. If nothing else, then you can just pass it on to your grandchildren, children, because the future that some of these Davos people are planning, they would like it that your grandchildren would not even be able to afford one. So I do also want to emphasize something, that even though as bad as it sounds, the current real estate market in the United States is nowhere near as bad as many other countries, and it has been bad for them for a long time sustainably. So you think that price needs to come down, and I think it should come down, but that doesn't mean it will come down. And I'm saying that because compared to average salary, much of the rest of the world is actually doing much horrible, much worse. The affordability, if you think affordability of the houses is bad now, I mean, just travel to Eastern Europe, Western Europe, Italy, some other places. I actually don't know much about Italy. I don't know why I said it. But anyway, travel to any other place of the world and ask what they can afford on a base average salary. And it's going to be a 1-bedroom apartment with a 30-year mortgage, where the state has to assure the bank that they will do a almost like a student loan type of deal, where they will make sure that the person cannot file bankruptcy for it, and so on and so forth, in order for the banks to even just give them a loan, and the subsidies and government stuff, and it's horrible. So if you think it's bad here in the United States, you don't know what you're talking about compared to other parts of the world, unfortunately. So that's not how it should be, but that's what I'm saying, and that's a huge parenthesis that you should think about, right? So I'm saying this because all depends on context and location and so on and so forth. So based on where you are, my plan based on the location of the suburb would be very, very different. In some blue states, and let's just be frank here, some blue states that are not friendly toward landlords, I would not even really think twice on what I would do with it. I would, right? But that doesn't mean it still can bring you a nice cash flow, and then you could retire earlier. So that again means something else, right? But maybe at least pick your county, if you can. So my general opinion is never sell anything. Just put it in your one of your LLCs, right? Let's just start with, I guess, what would be some like an ideal situation that I would want to get into, right? And then maybe that will work for you, maybe not, that will not work for you, but here's an ideal situation. I would want my primary home to be paid off fully, the one that I'm living in, and that would be on a separate LLC or on your own name, based on, well, how do you want to play the things out, right? Then each of your rentals should be at least a minimum in an LLC. Even better yet, you can do LLCs that are registered in Wyoming and nobody knows that they are in your name, right? So look that up, how you can achieve that. It may be worth it, maybe not worth it, based on your number of the properties and who you are, basically. But think about that, right? If nothing else, then maybe it should not even be in your name. The LLC could not be in your name, but it could be in someone else's name that you trust, with all these properties, right? And maybe it's their property, right? So anyway, you want to make sure that you figure out how and who you want these properties to be shown when anyone looks you up or something like that. That's, again, I'm not a lawyer, but you have to think about those things if you have multiple properties. Now, for one property, that might not be that big of a deal, but I would want my main home fully paid off, and that would be the one that I would be living with, the 5-acre one. Then I would want as many rentals as possible without upsetting a lot of people. But also, I mean, I'm a fairly conscious man. I don't think that people should own multiple thousands of rentals, but I think if you can give a house to each of your grandchildren, or maybe 2 houses for each of your grandchildren, that's pretty fair, I would say, because I mean, why not? You have been working all your life to do that, so good for you. You want to make sure their survival rate and their rate of productivity is as high as possible, and you want them to achieve prosperity as well as easy as possible, right? So now, regarding the rentals, I don't care too much if they are completely paid off or not. Actually, if they are completely paid off, you might be sitting on cash equity that you might not be utilizing to your best of your ability. Now, technically, in a recession, it's good to have it paid off, and that's really perfect. But in my case, I'm in my age and so on, I would want still my portfolio to grow. So what I would be doing in a normal situation where let's say the interest rates would be lower, I would not do this now, right? But when the interest rates would be lower, I would be refinancing them, pulling equity out and purchasing new properties until I have the portfolio I want. And then if I have that, I would want to buy commercial properties, which is, I don't want to get into that. But anyway, you want your properties to work for you, and you don't want them to just sit. You don't want to sit on too much cash, because you could be putting that cash to work. Now, there's a risk in that, absolutely. And it's not for everyone, and based on your capabilities, based on your age, and based on what your plans are, maybe paying everything off is good. But in my case, with my knowledge and my rentals and so on, I would not want that. I would not want that for multiple reasons, because I want to grow at this point, right? Well, not right now, but hopefully in a short market downturn, I would like to grow. So and also, I don't want too much equity in a house, because actually then you're not working together with inflation, because you're not maximizing your profit from inflation. Because if you have a fixed, and very, 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 very important to say, fixed debt, right? That is, let's say, you have 25% equity in the house, right? Minimum, you should have that, or I should have that. I'm talking about myself, right? I would want to have minimum 25%, equity. That's the minimum, even better 50%. But for the other 50, I'm fine with having some loans on the properties if the rent that I am getting in a ordinary scenario is at least, right, 30% more or 40% more than all of my cost on the property. So let's say a monthly cost on the property, which includes mortgage, which includes taxes, which includes the 10% for repairs that you put away, and the other stuff you put away for the roof and all the other stuff that fixed expenses that you will have, right? On top of that, if there's another 30% that you are making as a profit on that rental, then another condition, if you have at least 1 year worth of full payments stashed away for each property you have, then I'm fine with having some loan on the property. So let's repeat that because it was a bit slow, but okay, let's give a theoretical example. So you have a property which is worth, again, just the numbers, so it's easier to count. Let's say you have a property of $100,000. That's the value of the property. If it's more, then just multiply it, right? So that's the value, market value, right? That means at least I want to have $25,000 equity, right? Minimum, even better if it's like 40,000. Perfect. Okay, now on top of that, let's say, again, just for simplicity's sake, that property, and these numbers again are not correct, but for simplicity's sake, that property is renting for $1,000, right? But the cost of the property, when you count your mortgage cost, maybe you have you won't have mortgage insurance if you have 25% down, but you will have the insurance on the property, right? Now of course you do want renters insurance from your renters, but that doesn't count. You have your own insurance on the property, plus you have the taxes, plus you put away 10% of the 1,000, like another $100 for repairs, future repairs. And if you know some fixed costs that are coming up, like a roof repair, like a HVAC repair, and so on, you count another 10% or 5% on those based on your plan and when you need to replace it, and so on. So on top of all of that, if you all solved everything on that in the $700, and your profit, pure profit on this property is $300, plus you have another $10,000 saved in an account or in cash or whatever you do, then I'm fine having that amount. Me personally, in my position in life right now, I would be fine having a loan on that property. It might not be fine for you. I don't know your situation again, right? But this is an okay situation for me. Ideally, you want even 20,000 cash, and I'll tell you why a bit later, right? But minimum is $10,000 cash. Okay, so now you have that. What do you have? You have another $60,000 debt, right, on this property. Okay, so why don't I mind that, having that in a inflationary scenario? I don't mind having that because inflation is actually eating it away, right? Now, by principle, I try not to raise rent on existing renters. I never did that. I don't know what will happen in the future, but I never did that. But when they move out and you fix up the house and so on, rent usually keeps up with high inflation. We'll talk about hyperinflation a bit later, right? So in high inflation, you can raise the rent to some degree, right? And you can raise it to some degree. But when soon as we're starting to hit 15% inflation, eventually you will not be able to raise, because that means that let's just say the leadership of the country is failing. And now the people are suffering, and they're going to be suffering more. And as higher inflation kicks in, rent will not be able to keep it up, right? But hopefully by that time, you still have increased your rent from 1,000 to 1,200 on the next tenant and so on. And at some point you stop, because you cannot raise it further, because the market won't allow it, because people are suffering around you, right? And you still want to have your place rented and hopefully help other people. But your fixed mortgage was not raised, so it's still 700. Now all of that is being eaten away. So now $700 doesn't even buy a month worth of groceries or something like that. So your income is shrinking in real terms, but also your debt is shrinking in real terms. Your 50,000 or 60,000 debt is being eaten away by inflation. At some point, if you had, this is now speculation, at some point if you had gold or silver or some of that stuff, you might be able to sell a couple of ounces and pay that amount off in hyperinflation, maybe even half an ounce. In our case, it was 15 grams, right? Okay, in Romania, probably less for that amount, or comparable amount, of course, not US dollars. Okay, so now we're back. What is another problem here? Taxes. That's another problem. The taxes are a problem because of the house price has been increasing because of inflation, right? So your tax cost is growing. Your house value is growing. However, the rent will not be able to keep up, in my opinion, in my history, in Romanian history. At some point, even with our apartment paid off completely, the rent was barely enough to pay the taxes, right? Luckily, eventually, they didn't want another revolution, didn't care too much about taxes at some point. But that came back eventually. So it was kind of a weird situation. I'm saying that there's a lot of variables here that you have to think about. And one variable is that you might lose the house. You might lose your rentals. And you have to be okay with that if you don't have it paid off. But it's again depending on what is your play. How soon do you expect the hyperinflation, or if you expect a deflationary crash? Now, just a couple of words about a deflationary crash that could happen even prior to hyperinflation, right? So in this case, the house price will go down, right? The house price will go down, no question about that, right? Rent might go down, but not as much as the house price will go down, right? Again, your mortgage is fixed. It doesn't really matter. Tax might go down. It doesn't really matter that much. What will happen is that two things could happen. Either you can lower your rent, right? You can lower your rent by at least 30%. Because that was your profit, right? And you can still stay afloat with that rental. And in that case, you can still have it rented. If you have to lower it further down, it's hard to believe, but you could if you are in a bad city where that city was maybe relying on one major big industry, like a big factory, or basically you could only rent to students, or you were only renting to near a hospital or something like that, and then everything crashes in a deflation. You could, but let's just say that's not the case. and you get away with lowering your rent 30%, and your renters are happy because they get to live in a nice place and keep it up to some degree, right? And you get to keep it. But what happened in this case? Remember that $10,000 that I was saying, or why I said preferably 20,000, right? Now you can use it both ways. If you cannot keep your renters in a deflation that is pre-hyperinflation, then what you can do with that, and now we will continue this video for members only. Thank you for joining.